Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Leroy Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. That's right, your roadmap to financial freedom. Inside, we're going to be discussing things for absolute beginners who never even heard of the stock market or don't know what the stock market is. We're going to teach what is the stock market, what is a stock, what is an index. We're going to teach all of that. We're going to talk about options. We're going to talk about futures. We're going to talk about fundamental analysis, technical analysis. Speaking of technical analysis, we're going to take a deep dive into the ICT concepts. We're going to discuss how to figure out how much you need as an individual to save for your personal retirement. We're going to talk about retirement portfolios. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, everybody. Hey, somebody just sent a message saying no YouTube tonight. Is YouTube not streaming? I'm looking at YouTube. Mic check, mic. Yeah, I'm looking at it right here. Do I not have it? Is it not public? Oh, wait a minute. You know what? When I first was doing it, it was set wrong. And you know what? It might not be set public because it was set as a tape reading stream initially. I'm like, why is it saying tape reading? Yep. And it's not set for public. It's not set for public. Okay, now. I don't know. Hopefully that fixed it. All right. Hopefully that fixed it. I don't know. I don't know if that fixed it. All right. Can y'all see the YouTube now? I don't see anybody on there. I'm glad I saw that I'm glad I saw that chat. Okay. All right. Okay, see it now. I told you no. I told you no. Excuse me. Excuse me. I told you no. All right, man. I think I got that together. I'm sitting up here. I'm thinking, you know what I'm saying, the notification of went out and ain't nothing go out. So I give it a few minutes to see if anybody pull up in the U of the tube lands. Let me go ahead and two different questions. Okay, if that's what you say. I'm gonna give it a few minutes to see if anybody pull up in the YouTube. Hold on, man. I got too many windows open. I got too many closed. Get out of my way, Discord. Oh, my brain. Oh, my brain. All right. Okay. I'm pinning the link to the top of the chat for the Zoom link. All right. Pin the link to the top of the chat for the Zoom link. Send me I see you in here. You can't see nothing. It says that you're in here. Squirt. It say that you in here. I want to watch on my computer. It ain't. I don't know what that is. All right. I sent the invite to the email that's linked on your MacBook. I sent it to your email that's linked to your MacBook. So I guess just open it up because I don't know what the I don't it's all automated. I don't be making it. I don't make the I don't be making the passwords and stuff. All right, let me it should do all that in the link, but I'll try this right here. That's what it says it is right here. That's what it said it is. I don't know if it'll work, but it usually just be all in the link whenever I do it in the link. So hopefully that helped. But I sent it to that email too. So if you open up that email, it should just go in with the link like normal. But that's the ID and password that it says belongs to that stream. All right. So now that's out of the way. Let's see if anybody on the U of the tubes. Yeah, we got a couple people put up on the U of the tubes. We kind of like today, right? Uh, here, learn to share. You looking for the password too? I see here, learn to share. Oh no, okay. All right, we kind of like today. Uh, since we light, I guess we'll make it a quick one. Since we light, we'll make it a quick one. Everybody got better things to do on their Friday nights. Hey, I ain't mad at you. Got better stuff doing Friday nights than to come listen to little Tim.
We deep up in the Zoom.
Yep.
And they listening to Glorilla. Ain't they Glorilla with the Friday? 7 p.m. Friday.
Yep, that's it. That's what they listen to. They listen to that Glorilla. 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 They listen to Gloria Hallelujah. Just disregard us. You act like y'all deep over here too. The balance between Discord members and Zoom participation is always skewed. Like this right here. Good evening, everybody. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning into Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., aka Aranya Gunday. I noticed that my lamp ain't in the screen, in the shot. Now my lamp is in the shot. Aranya Grande. That's just Big Spot if you don't hablo español. And you're in tune to another episode of the Intraday Price Action Recap. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Tim, why you always talk about the Smart Money Manuscript? Well, first of all, because I put a lot of work into it, right? I put a lot of work into this Smart Money Manuscript. Second of all, right? I think this is a valuable asset for individuals that's looking to learn Like you just touch down into I want to learn about investing in trading land, or if you touch down before and you still kind of in limbo and haven't got your sea legs together, or if you feel like you're fairly familiar with everything, but you just want to take your game to the next level, Smart Money Manuscript is for you. All right. But Tim, you're saying that like it's just the best thing since sliced bread. I personally think it is. I personally think it's the best thing since sliced bread. Right. Um, it's laid out. Let me go here. Let me. I have to make like a little video to put at the top because I ain't gonna hold you. WAP low key suck. There, the site it low key suck, right? But I have to make like a little video to put like on the main page, right? Because the link that's pinned in the description is going to take you straight to the checkout page. So if you don't already know what it is, you not going to get a feel for what you're getting. So I think I may change the link to make it go to the main store page, right? I may change the link to make it go to my main store page. Let me see here. Dashboard. Where is it? There it is. All right. So all right. Let me share my screen. This is kind of like my dashboard. Let me copy this. All right, that's copied. Go there. Nope. Let me copy this. That's copied. There you go. Okay. All right, now let me share my screen. All right, so this right here is the main screen. This is the main page. I may change it to this link right to come to here, but before I do that, I want to record a video because right now it just has like a picture here and it doesn't really, what I'm saying? It's got like a little description right here, right? And I guess I could add some features down there for if I wanted to. But what I think I'm doing, I'm gonna add a video here instead of just the static screen. I'm gonna add a video here so the video can explain what's going on, right? And I'm gonna add this main store page to the link because the link takes you directly to the checkout page. So I'm gonna change it. But for those who don't know what it is, the Smart Money Manuscript, it's a as it says over here, a comprehensive course that provides you with the essential knowledge and practical strategies to achieve your financial goals. All right. We got it's 2.5 hours of content. What these 2.5 hours of content does, it takes everything that I've ever discussed on my YouTube page, right? And it compartmentalizes it into small bite-sized chunks, right? To walk you through all the different areas, right? So, and it's laid out in a particular way, right? The intro is just me talking, saying welcome, right? You got phase 1, phase 2, phase 3, and phase 4. Okay. It's laid out in a very particular way. It's designed so that when you start at phase 1, and by the time you get to phase 4, you will have everything you need to be able to just identify money, budgeting, and banking just on a surface level to what does it take to be an investor and trader, how to research companies, how to decide what type of portfolio you want to create. Do you want to do a retirement portfolio, a regular taxable account? Do you want to do options? Do you want to do futures? Do you just want to buy and hold? Do you want to be a day trader? Do you want to be a swing trader? You understand how all of this stuff works. And then not only do you understand how it works, but you understand how to read price. Now, this course ain't gonna do it all for you. Once you go through the course, you have to do the work of actually studying the material and internalizing it and building your own trading strategy and system so that you know when you want to do it. But this is your foundation. You're bridging the language barrier and you're learning how to do what I do on a daily basis. Everything I talk about in here, this is all the stuff that I learned. And then I just studied it, practiced it, and started to apply it. So once you learn it, you study it, practice it, and you start to apply it. Right. And if you want to be a day trader, you can be a day trader. You want to be a swing trader, you can be a swing trader. If you want to be a long-term buy and hold investor, you can buy and hold, or you can do all of the above. You want to have a retirement portfolio, you want to have an IRA, you want a Roth IRA, whatever you want to, whatever kind of account you want to do. Right. So in phase 1, it talks about banking, but budgeting, banking, and taxes. And each chapter is a small bite-sized video. It's just getting to the meat and potatoes of it. Ain't no fluff. It's just all meat and potatoes about everything that we talked about, and it's complete with quizzes to test your knowledge on each chapter. Right. Once you get the basic on budgeting, banking, and taxes, right, you move on to phase 2, and now you're getting into how to what is a brokerage account, how to open a brokerage account. Right. Once how much I need if I just want to manage my retirement portfolio. How much do I need to save? Figure out how to find that exact number for you. It learn about how to research companies. Tim, I want to buy companies, but I don't know how to look them up. I don't know how to find them. I don't know what's a good price, what's a bad price. It is, how do you find this fundamental information about a company? What is fundamental? What is technical analysis? What is fundamental analysis? What is a chart? What is a candlestick? You know what I'm saying? What does a candlestick tell me? You know what I'm saying? You're getting your first peek behind the veil into the stock market, right? You get your peek into what is the stock market. You know what I'm saying? What is a stock? What is all of this stuff, right? You're getting your first peek into the side that you go in there to Wells Fargo or Chase, and you sit down and you talk to this man or this woman with a suit on the other side of the table, and they say, "Hey, Mr. Rogers, I'm going to manage your portfolio for you, and I guarantee you 7% annual APR," right? And you don't know what they be doing. It's your first time to get a peek behind that curtain, right? And then once you finish with phase 2, you move to phase 3. And phase 3 is teaching you, okay, what type of portfolio do I want to set up? Right. And once I set up my portfolio, do I want to allocate a certain percentage toward options? What are options? How can options help me leverage my capital? Do I want to apply a certain percentage toward futures? What are futures? How can I use the leverage in futures to help me grow capital faster? You know what I'm saying? I look at trading options, looking at trading futures, looking at the importance of back testing. Remember when I told you, once you learn the concepts, you want to go back and study it. You study this stuff by back testing. It's called back testing. You go back, that's how you study, right? What's the importance of back testing? How do you back test? Right? All of that stuff there, it's like, and then once you get that out of the way, then you get into phase 4, right? Phase 4 is where you learn how to read price action, right? And reading price action is the technical side of studying the companies that you want to invest in. You have fundamental data like their SEC filings that let you know how the company is doing, how healthy the company is as a company. And then the technical side, which is reading the price action on the chart, it lets you know how healthy the stock is. Is it if it's healthy, it's going up. If it's not doing too good, it's going down. But if you understand how to read the chart, you understand, okay, if price does this, then it should do that, because the market is driven by algorithm. And once you learn how to read that, now you understand how to read the price section. And since now you understand how to read the price section, you've already done your fundamental analysis on the companies that you right here. You did your fundamental analysis on the company that you want to invest in. So now you know how to read the stock chart. And then you say, okay, my fundamental analysis says that this, based off their EPS and all this stuff right here, they should be worth around X amount of dollars. And then you look at their stock chart and be like, okay, they trading way too high, but based off how the price action is moving, right, we should retrace back down into this fair value gap, or retrace back down and take out this sell side liquidity, you know what I'm saying, before we start to move back up. Once we come down there, then I'll buy some shares there, because you know how to understand how to read the price action. You've studied it, you've internalized it. And then you'd be like, okay, while I'm waiting for this to get here, that I think I'm just going to trade some options. Since I think it's going to retrace, I'm going to buy some puts on this and make some money as the stock goes down back to where I want to buy it. And then once it get down to where I want to buy it, then I'm going to cash out my puts and take the money I made off my puts and then actually buy the shares at the price that I want to buy them, right? Yes, that's the type of stuff that you can do with the Smart Money Manuscript. And it's all for $69.99. Now that my sales pitch is over, right? Is there anybody who has partook of the Smart Money Manuscript that would like to share their honest feedback? I'm putting it out there on Al Gore's internet. I don't want you to get on here and sugarcoat it. If you would like to share your honest input about Smart Money Manuscript, feel free to unmute in the Discord and share what you think of the Smart Money Manuscript, right? Now, I don't want to turn it to a love fest, because y'all like to love fest me. But if you would like to share your honest opinion with the people who may be watching, I give you the floor. Where's my water? I didn't bring my water back here. And I'm mad thirsty. Y'all hold on, I got to get my water. What? How much you spent at Walmart today? I can't hear you. Son, open the door. You said 138. Was gonna transfer the money back, but 138. Golly. All right. I'll check the take a screenshot of your account and send it to me. You heard me? No, you didn't. Okay. Chris just gonna have you back because it's us versus them, cuz.
Until you know you ain't on mute.
Sick good. Y'all think I done lost a step because I done turned 53. Don't let smooth taste fool you. I'm a tooth chipper.
You yell like you wasn't on mute.
My bad. Question. When I refer someone to the course, will they have enough information on ICT section to use it to start studying and practicing, or do they go from the course to your YouTube for deeper understanding? Um, they, I mean, you can always go deeper with the YouTube, but what the course does is it gives you uh, a solid foundation where you don't have to go to those other playlists and to get an understanding of what everything is being talked about. Now, with the amount of information that I've put on my YouTube channel throughout the different videos about these PD arrays, right? There are deeper dives into the concepts that you may find on the YouTube channel, right? Like, for example, I've done like the art of reading price section where I've gone through the ICT concepts. I've done the ICT live streams where I've gone through the ICT concepts. I've done the boot camps where I've gone through the ICT concepts. And it's like so many nuances when it comes to the ICT concepts. If you go through those videos, I'm pretty sure it's a lot of gems that's in those other videos that's not in the Smart Money Manuscript, right? Because the Smart Money Manuscript is giving you the meat and potatoes of what everything is. Oh, was I sharing my screen already? Was I already sharing my screen? All right.
Yeah, we was looking at that. It was
All
up
right.
there.
Okay. Let me see here. Okay. PD array matrix. Like for example, here, right? PD array matrix. This is 15 minutes long, right? This is 15 minutes long. It covers the different PD arrays, right? It covers the PD array matrix and the different PD arrays. Now, in past playlists that I've created, right? I may have like fair value gaps. I may have 3 different videos about fair value gaps, right? And it's like I'm going into what a fair value gap is, um, different ways of using fair value gaps. This is the right. I'm doing like I'm spreading out fair value gaps over multiple lessons. So I'm talking about fair value gaps over multiple lessons. So in a playlist like that, you're going to have more information on each PD array than you would have out of here. But what this is, right, instead of me telling you, all right, go to the original Tim's Tidbit playlist and go through all of those videos for this information here and some of this information here. And then go through how to trade futures and how to trade options playlist for some of this information right here, right? Some of this information here may be in the original Tim's Tidbits. Some of module 3 may be in some the original Tim Tidbits. Some of it might be in how to trade futures. Some of it might be trading options. Some of it may be, over there. Then 4, some of it might be in the art of reading price section, lingo, and some of it might be in the art of reading price section, um, how to find a structure. Some of it might be in the auto reading price section, strategies. Some of it might be in the boot camps. Some of it might be in ICT live, right? And then now you got like 800-900 different videos that you're trying to siphon through to find all the information. But now you got everything right here, and this gives you a solid foundation. Now, once you get this foundation, now if you go through and you do the homework and you do the homework in a proper way, right? If you go back through and you understand time is king, right? Because we talk about time is king. We understand that time is king. So when you go through and you're trying to identify information about the PD array matrix, right? You understand that time is king. So while you're looking for these different PD arrays, then you want to look for them based off of time and when does it happen. And then as you're not just looking for the PD arrays, you're looking at how is IPTA delivering the price to the different levels, to the different PD arrays. And then you're looking at, okay, when it's delivering it, what is the order flow? Are we in bullish order flow? Are we in bearish order flow? Right. And if we're in bullish order flow, are we in a market maker buy model or are we in a market maker sell model? So if we're in a market maker sell model and we're in bullish order flow, then you know that we're in some type of manipulation, because the power of 3 says that it's going to accumulate, manipulate, then and distribute. So if we're in a market maker sell model and we're in bullish order flow, then that must mean that we're in a manipulation portion of the price delivery. And based off the power of 3, you see everything, when you understand how to tie it all together, right? Because you don't, unless you have all of it, you don't know how to study, you know what I'm saying, it properly. That's why it's laid out in a certain way, right? So when you go through and you learn about this, right? You learn about budgeting. You learn about how to open a brokerage account. You learn about how you want to lay out your portfolio. Learn about options. You learn about futures. And then when you learn about how to read price, you learn that time is king. You learn about the PD array matrix. You learn about displacement. You learn about price delivery. You learn about order flow. You learn about market maker models. You learn about the power of 3. Now that you know all this right here, you're going back and you're studying all of this and you're back testing all of this. Now you understand how everything is built, like this right here. All the way at the bottom, that's the solid foundation that's carrying everything above it. Right. But because you know all of this stuff here, once you get down here and understand the power of 3, now you know what, like if you just look at the power of 3 video, right, and you don't know anything about a market maker model, or you don't know anything about order flow, or you don't know anything about price delivery, or you don't know a thing about displacement, you don't know anything about PD arrays, you don't know that time is king, right? Then just looking at the power of 3 video ain't gonna help you, because you're like, okay, what does this mean? What does that mean? What is it? Because you don't understand the other pieces of it. But once you understand the other pieces of it and you know this is the glue that holds it all together, now you know how to go back and study this stuff properly. Right. And then once you know how to study this stuff properly, now you know how to go back and trade futures properly. Now you know how to go back and trade options properly. Now you know how to go back and organize your portfolio properly. Now you know how to allocate a certain amount to options, to futures, or to stocks, or however you want to do it. Now you know what I'm saying, how when you go back and look at these companies and look at them fundamentally, you know, based off of the fundamentals, this is a good price. And you know how to look at a chart to know, okay, it should be coming back to this price after it does that. Or you say, okay, if it should be coming back to this price, I can make money as it's going back to the price, because I can play options and play it to the downside. You know, now you understand how to do all that. And then you understand, when I make my short-term capital gains or my long-term capital gains, I'm going to be expected to pay a certain amount of taxes based off of where I live, right? All of that stuff like that. So again, it gives you a solid foundation to start with. They got enough information to they got enough information to go in, start. Like I say, everything that I put in here, this is all the stuff that I learned and started studying. Now, there's always a deeper dive into it. And that's why I said that we're going to be having random scheduled live streams inside the platform. If you see over here, that thing that says SMM Live, right? Smart Money Manuscript Live. I'm going to schedule it, send out the notifications. I still got I got to run a test to see how do I send out the notifications in the platform. And speaking of in the platform, if you're on your mobile device, please download the app, because the website on mobile devices sucks. It's horrible. The website version on your phone is terrible. Please download the app. It looks much better in the app when you're trying to go through like the course, right? When you're trying to go through the course, it's got it laid out just like this in the web version on your phone, and that's horrible. But inside the app, it's nice and clean and app like. It's set up like an app, right? So, yeah, go through on the app. Yeah, man, that's it. Any other questions about it? To add a little, if you notice, it goes straight to checkout. Yeah, I know. That's what I say. That link is straight to the checkout. That link is straight to the checkout, and I'm gonna change it because a friend of mine hit me up and was like, "Hey, you know what I'm saying, you might want to put a page in there where you can see what they're getting, because that just goes straight to the checkout." And I was like, "Okay, thanks for letting me know that," because you know what I'm saying, when I copied it, it was like copy the link, right? And I thought it was gonna go right to the page, right? And once it go to the page, you know, like when you go to something and it's for like a course, you can kind of see like, you know what I'm saying, like what's in, but they site don't do that. So I got to come in here and build that out so that you will know exactly what's going on, right? And then I might add some stuff down here to add in, like, you know, well, features really, but I'll probably add some stuff down there to like kind of let you know exactly what's going on. But I want to more so do a video so you'll know exactly what you're getting, right? Now let's get over here to this price action, right? Today, all right, I closed that up. Let's pop up to our weekly chart real quick. All right, looking at, why is that showing on the weekly chart? We pop up here to the weekly chart real quick. As we see here on the weekly chart, right? This week, right? We opened up here. We dropped down, came all the way down, did not make it to that bullish weekly fair value gap. We did not make it to this BISI down here, right? And we moved back up and closed in the upper quarter of that week. And we take a Fibonacci tool in between the quarter and the half, right? But we closed in the upper half. So it is a down close week, but there was more bullish momentum throughout the week, right? Because we closed all the way up here. Okay. So there was more bullish momentum in this candle because we closed above that 50% right there, closer toward the upper quarter, right? On the weekly time frame. Looking at our daily time frame, right? Looking at our daily time frame, we see that on the daily, right now, where we ended the week, right? Where did we end the week? This is a throwback phase that we used to use all the time. But where are we right now? Looking at this 819 candle and this 820 candle. Where are we right now?
Big
be at equilibrium look like it?
I mean, yeah, close to it.
Oh,
But
you mean as far as a premium or a discount?
where we are, I said that in reference to this 819 candle and this 820 candle. What's a throwback saying we used to say all the time when we be like at a place as such as what we are
Oh, in
now.
the Tale of Two Cities?
Yes.
Yeah. So what two PD rates we in between?
If you notice on the weekly chart, right, what are we doing? Are we expanding greatly in either direction, up or
No, we
down?
doing consolidating mostly.
Yeah, we're consolidating there, right? Once we came above, right, all-time highs, right? We're just engineering liquidity, which is normal, which is anticipated, right? So
See, I got to remember to use that too instead of saying consolidate, engineering liquidity.
yeah, consolidating is fine. That's fine. Nothing wrong with saying consolidating. But like once we come above these all-time highs here, it's expected for us to sit over here and engineer liquidity. Why? Because the algorithm has to build price structure, right? Price structure has to be created, right? So we come up here, right? We came here, right? We went down, we went up, and now we're just kind of consolidating right here now, right? We're creating new structure up here. So in the weekly time frame, the only thing we can do is just stick with the last bias of we're bullish. Why? Because it's not showing us anything different right now, right? We can anticipate that we will probably get a retracement because we're in such a premium. And from here, right? I'll say from here up into there, how much retracing have we done? None. We haven't done on this weekly time frame, right? We haven't done any retracing, right? We dropped down, we went up, right? We haven't done any retracing in this area right here. Okay. And then when we pushed up above this right here, the algorithm is like, okay, I'm done with all of this area right here. So since it's done with all this area right here, right? Even if we do start retracing, right? We don't want to see a super deep retracement, right? Just based off of what we did, right? At the most, what we'll be looking for price to go to, right? At the most, right up in there, right? At the most, right up in there. That would be healthy price action. Tim, why do you say that? Right? Because on the weekly time frame, that right there is the very first imbalance that we created when we came down here, swept out this liquidity, right? And then came back up, right? Giving us a bullish breaking market structure. So we're looking at this right here is a high probability inversion fair value gap. And we want to see that act as support to price. Okay. So right now, the weekly time frame is bullish. It's above this high probability inversion fair value gap. So if it was to come back down, we would want to see this act as support to price. Tim, what does that mean? That means on a closing weekly basis with weekly candles, we really don't want to see any weekly candle violating this to the downside. Can we come down and poke below that and take out some liquidity? Sure, we can. Sure, we can. Right. But on a weekly closing basis, right, as of now, right, this bullish breaker, this inversion fair value gap, this BISI right here, right? We got all of this confluence in this area right here, right on top of this balanced price range, right? That's our area that we're looking to act as support on price. And right now, we're just engineering liquidity. We're just consolidating, right? We're just consolidating. Last week, we poked above the area, took out buy side, rejected off, right? Then this week, we started making a move down, right? Now, if we reject the high, a probable target would be the low that sent you there, right? So we started a move down towards it. We rejected the high, started a move down towards it. And now it's looking like we're retracing back up, right? Where did we retrace back up to? Did we retrace back up to a premium to offer opportunity to sell down into that sell side? Maybe we did, right? But what we say, we never try to pick a top. We just look for signatures to see if that's what we're going to do, right? So on a daily time frame, right now on a daily time frame, where are we? We're in between the tail of two cities, right? Now, so far on a daily time frame, price has been doing exactly what we anticipated it to do. We said on the daily time frame, we had started seeing bearish signatures. We said we had an inversion fair value gap. Said we had a bearish change in the state of delivery, right? So once we got our inversion fair value gap here on this BISI, right? We traded down, right? We've created a SIBI there. When we created this change the state of delivery, then we created a SIBI here, right? Making this a breakaway gap, right? And then once we drop down and tap that daily low that we was anticipating price to draw back down to, we rejected off of it, right? If we reject the low, what's the reasonable target? The high that sent you there, right? Now that we know our reasonable target, what is supposed to stand in the way? This inversion fair value gap, right? This bearish order block right here, this SIBI right here, in line with this bearish order block right there, right? And all intensive purposes, we could look at this bullish order block as a bearish breaker, right? Why? Because price made a high and then we came back down and took out that low, right? That low broke that high, right? So now all intensive purposes, we can look at that bullish order block as a breaker, right? But we got a bearish order block, change in the state delivery, BISI right there, and an inversion fair value gap right there, okay? Showing us bearish signatures, okay? Now, on a daily time frame, right? If we got down to here, for right now, that would give us a bearish breaking market structure, right? On the daily time frame. Remember what we said, right? If price was to just go off and do that right now, that'd be fine. But if that's our monthly, right? We took out our weekly low and that was our weekly high, right? So we said, we said like for the weekly time frame, right? The monthly had already traded above the monthly high and start to break down, right? So we said we want to see the monthly high taken out before starting this bearish seasonality. Price went up, took out that monthly high, right? And now we're starting to drop down. When we came into this week, we said, now we're not trying to pick a top because just like coming into the new month, we want to see the monthly high taken. Now we're coming into a new week. If Phil wanted to hit the button and make the new week take the high also before coming down, we would just allow that. Why? Because we're not trying to pick the top, right? And we all seen the algorithm be a dirty dog and run up there and hit that liquidity one more time just to add insult to injury, right? For people who was already short on the right side of the market, and they just run up there and hit them one more time before actually dropping it down. But we haven't seen that yet. What's there to stop it? This SIBI right here. So now we have this SIBI here and this SIBI here. Now today, right, we created an inversion fair value gap. No harm, no foul, right? This inversion fair value gap right here. Why do now I had that on my chart this morning when I was looking at a tape reading session. Why do you think I'm saying there's no harm, no foul about that SIBI? And why do you think I had it marked on my chart, right? Dealing with what price had shown me already. Who want to take a guess at that? Why do I say it's no harm, no foul about this becoming an inversion fair value gap? And why do you think I got it marked out on my chart there? Come on now. Come on now. We sprinting now.
Because it's in discounted at range. And it could be used to help push us back up into the premium.
Mm-hmm. Mm-hmm. Yep. I ain't got my Discord open. Somebody make the noise for me. Make the music with your mouth, biz. Am I sharing my sound? Could y'all hear that? Yes, y'all can hear it. All right. So very good. Now, looking at our current dealing range, our entire dealing range right there. Right. If you look at our entire dealing range, even if you look at this leg here, right? Most of it is in the discount, right? But if you look at our entire dealing range here, this SIBI right here is below. This is equilibrium of the entire dealing range right there, right there, right? That's equilibrium. Let me do this right here. Put it at CE, right? Right. So that black line there is equilibrium of the entire bearish dealing range, right? Anything below that line is discount. Anything above that line is premium. Okay. Right now, this is a bearish dealing range, right? On the daily time frame. So right now in the short term, the daily time frame is in a sell program. If the daily profile is in a sell program, you're looking for reasons to sell. If you look for reasons to sell, you're looking for reasons to sell in a premium. So you look for reasons to sell anywhere above this line right here. Okay. So when we open the day up, right, we drop down. Well, before I say that, when we open day up, we're in a discount, right? So you see here, this is our overall dealing range, right? This is our overall dealing range. This right here is our dealing range for the week, right? So from that high to that low, that's our dealing range for the week when we open up today. So we take off today's price action, right? At yesterday's close, in between this black line and that black line, that's our dealing range for this current week, right? In between this purple line and this black line right here, that's our overall bearish dealing range, right? Since we took out the monthly high. Okay. Now, looking at our overall dealing range, right? We said this was equilibrium. Where are we? We're in a discount, right? Starting out today, we're in a discount. Okay. Looking at our weekly dealing range, right? Just from Monday up until Thursday night, right? We are in a discount, right? This is equilibrium, right? This is premium. This is discount, right? From that high to that low. Okay. We are in a discount. All right. Coming into looking at yesterday's dealing range, right? When price closed, we are in a discount, right? So we're in a discount on our overall dealing range. We're on a excuse me. We're in a discount in our weekly range. We're in a discount in our daily range. So we are in a deep discount on every higher time frame. Thank you. Every higher time frame, we're in a deep discount. So if we're in a sell program, should we be looking to buy down here? No, we shouldn't, right? Now, we dropped down on Wednesday and traded into this swing low right here, right? We had identified this as a draw on liquidity right there, that swing low right there. We identified that as a draw on liquidity. When we took out that swing low right there, right? That gave us a bearish breaking market structure on the daily. True. This move here, that is a stronger market structure shift. Why? Because this is the entire move, right? That's the move right there. Trading down here below there, that's going to give us a bearish breaker on the daily. You see what I'm saying? Because this is the move. This order block here is engulfed inside of this order block. So this is a propulsion block here, right? This is our entire move. This is the move there, right? So you come here, here, and trading down below there. That's a stronger market structure shift. But this right here is a market structure shift, nonetheless, because we got this swing low that came up and took out that swing high. So we trade back down below there. Boom. That gives us a bearish breaking market structure there. So we get a bearish breaking market structure and we reject off of there. Then the next day we come down and don't take out that low, right? We have an inside day, but we don't take out that low. So now we've indecision day on Monday, large range down, right? On Tuesday, large range on Wednesday, but more buy side delivery happening, right? Creating a bullish down close candle, right? Because it's a down close candle, so it's bearish on the day, but this is more of a bullish sentiment. This is a true bearish sentiment. This is indecision, but this is more bullish sentiment right here, even though it's a down close candle, right? Then we come here next day, do not take out that low, right? And we haven't had any retracement. So now we're anticipating this low to be protected. Why? Because we've created a short-term swing low right here, right? We created a short-term swing low. We're in the discount and we don't anticipate smart money selling in the discount, right? We anticipate smart money buying in a discount to take us back up to a premium. All right. So now we're looking at our overall dealing range, right? And go ahead and put today back on. And we notice that today, right, since we're anticipating a retracement to get back to a premium, what do we want to see happen first, right? We open up and we immediately engage sell side liquidity on the daily time frame, right? So for our weekly, right, this is our weekly range that we're in right here, right? For our weekly range, we haven't done any type of retracement. It's been down, Baby Yo Street in a Range Rover. Okay. So now when we open up Friday, we drop down and take out a daily low, right? Because on our weekly time frame, right, we're looking to complete a weekly power of 3. Right? We're looking to complete a weekly power of 3, right? So if we come here, right? If we come here and go up and come down, right? And go back up, right? What do we want to see price do? We want to see price either keep going up or start to come back down, right? Does it have to happen during the week that we want to happen? Nope. And see, that's where we go wrong because we want to see a weekly power of 3, we want it to happen every week. We want it to happen every day. We want it to happen every candle. We want it to happen. The power of 3 ain't always going to happen every time you want it to happen. But if you look back through the price, you can see the power of 3 playing out, right? So just because we want to see it happen during this week don't mean that you're going to get it during this week. You understand? Okay, I hope so. So we come here, right? We come there, open, we drop down, right? Once we drop down, we reject off. Then we open here, right? We drop down, and then we go back up right there, right? Now, remember we said we want to see a power of 3, right? Pay close attention. Like I said, man, what I said, it's not going to always happen in you can't fit it into when you want to fit it in, because it's all about where the algorithm is in its fractal nature of time and price, combined with the fact that Phil go in there and push the buttons and hold the algorithm, you know what I'm saying, restraint within a phase, right? So pay close attention here, right? We start out this week here, right? It's what we starting out this week, right? It's kind of like a little indecision candle right there, all right? And then we drop down, right? When we drop down, what do? We drop down below that low right there, right? Once we drop down below that low right there, what does price do right here? Reject off of that low and close right there, all right? Now, when price, what do we say? When price touches a low or high like that and get a strong rejection like that right there, what just happened at that low right there? Who can tell me? What just happened at that low right there? When price touches a low or a high and get a really strong reaction like that right there, what just happened right there? Hmm? Hmm? Don't nobody know? Ain't nobody gonna take a guess? And please don't nobody pop up and say, hey, repeat the question again.
Price is showing us that it's leaving that liquidity to come back for later. So it rejects off that area, indicating that it's gonna go back up and setting up liquidity for later.
No.
All right.
Order block is a no. All right. So we got, all right. So let's walk through it. What's resting below that low? What's resting below it? Here, Learn Chef said triggered stops, right? You're in the right ballpark with trigger stops, right? What's resting below that low right there?
Sell stops.
Sell stops are below that low right there, right? So when let's do this right here. Let me see here. Delivery. Let me see if it's delivery. It's Smart Money Manuscript here, y'all. This is Smart Money Manuscript here. It's the box. Might be order flow. I got to see which one it's in. All right. Expansion. Reversal. Pretty cool. Pending orders are located. All right, let me look at see which one is in displacement. Order flow. All right. Order flow. Yes. Support candles. Expected. Mark square sheet. Order flow. Really good entries, induce more. Let's look at displacement. Got so many different ones. Now look at which one is in. Right there. There it is right there. It's the institutional sponsorship under display. Yes, on displacement, institutional sponsorship. Right. What happens? Right. Get out of here. Okay. We'll come here. Put that there. All right. Okay, this is the swing low right here. Right. We see the swing low right here. All right. What happens? Right. What happens when price goes below, right, a short term low, right? What happens when price goes below short term lows, right? Price, what happens there? Price, you meet what? Right? Price is met with what?
Willing buyers.
Yes. So sell side liquidity, right? This sell side liquidity right here, right? This sell side liquidity right here. I said, well, I'm highlighting the wrong thing. Right there. This, but you're exiting to, right there, willing sellers. Right? I highlighted the wrong thing the first time. I jollifies. I highlighted, you see right here, it says long setups. And when I was in there, I was on the side that says short setups. Right? So long setups, right? Right? Buy side liquidity left in the market above price, right? Pairing orders, pairing long exits to willing sellers, right? So you're looking for the evidence of liquidity left in price, right? But when you go below these lows here, right, you're looking for evidence of the algorithm pairing orders to willing sellers, right? And where do you see the evidence of the algorithm? Because all this right here, you're looking for, these are the things that you're looking for evidence of institutional sponsorship. Y'all remember we looking for short-term liquidity left in the market. You're looking for intermediate term balance going back, move to discount or sell side liquidity, right? You're looking for a move to discount or sell side liquidity. You're looking for evidence of the buy side liquidity left above the market and evidence of the algorithm exiting to willing sellers, right? Looking for like reversals, hot, all the stuff there. So if we have sell side liquidity right here, right? What's these sell stops are what? Willing sellers, right? They're willing sellers. Why are they willing sellers? They are stops to say, get me out if it comes back down here because I was long and I'm wrong. So get me out. Sell my position, right? I bought my position, sell my position. I am a willing seller, right? Also, is people resting down here that says, if it comes below here, we're going to Hades. I want to sell the market as soon as it trades below the low right here at 23,045 and a half, right? Sell, willing sellers. So when we see the evidence of institutional sponsorship where it's moving to a discount, it's dropping to a discount, right? And it's dropping to an old low, right? And then we see evidence of buying from willing sellers, right? Right? Buying from willing sellers right there, reject there, right? When you in that long rejection there, is evidence that the algorithm has distributed some positions, right? So when you go above a high or below a low and you get that rejection like that, you can see that the algorithm, when we called in retail world, we call this a stop hunt, right? We just did a stop hunt, right? But the algorithm is offsetting their positions. They're distributing their position. They're, you know what I'm saying? If you want to call it offsetting or distributing, right? But you're getting out of positions and getting into other positions. So you're pairing orders with willing sellers and you're making them sell at a discount. Now, right? Now that we see that, right? So what do we have here? We have price accumulates here. Price manipulates here. And what do we say happened down here? The algorithm did what with their positions? Distributed their positions. Came down here and distributed their position right there. So when we're looking for the power of 3 in this week, guess what? The power of 3 started here. We accumulated, we manipulated. And when we manipulated, when we was up here, what were we doing? We was anticipating price to come down to that low right there, because that's the low that we have marked out, right? Why? Because we identified this as the manipulation move. And now we were trying to get involved on the distribution move, right? So we trying to get involved to ride this distribution back to the sell side, all right? And then you say, well, Tim, right? We accumulated, manipulated, and distributed right there, right? Okay, that's fine. That was over a large frame of time, right? And once we distributed right there, right, what do we do? Right, we was in a sell model right there, right? And then what did price do this week, right? This week, right? This is Monday, this is Tuesday, this is Wednesday. So Monday, Tuesday, and Wednesday, right? What we doing? We were finishing this distribution leg right here. So now that we've come here and finished that distribution leg, right? What happened, right? What do we have right here yesterday? What is that right there? What do we call that? What is that called right there?
Inside.
We had us an inside day, right? So looking at this inside day right here, what's the first thing come to your mind when you see an inside day? It can be a doji, it can not be a doji, but if it's an inside day, what comes to your mind? Consolidation, indecision, very good, right? Shout out Here to Learn and Share and Valentine. Consolidation or indecision, right? What is another term for consolidation? What is a concept that consolidation brings to mind? Got here. What would that be? Let's check here. Let's check the power of 3. Power of 3. Very good. Accumulating, right? Here, Learn to Share said accumulating. Y'all letting Here Learn to Share I talk y'all, and y'all can unmute. And she typing. Accumulation phase, right? This is the initial stage where smart money quietly builds their position. Price action is typically sideways and confined to a tight range, often during low volume hours. This consolidation creates liquidity in the form of stop loss orders from retail traders who have either bought or sold the edges of the range. The key here is to observe the range and not trade it. Right? My dog, Squirt, you on here? Squirt, are you on here?
Yeah, I hear you.
When you called me yesterday at 9:30ish, when you was like, Dick, if you busy, I can let you go. What did I tell you about yesterday? What did I tell you I was doing yesterday when it came to trading?
You said that you were going to remain like quiet. You're not going to do anything because they were engineering liquidity, and it was in like that bottom bracket where it wasn't to do any type of trade.
And you see what this right here say? This say the key here is to observe the range, but do not trade it. Right.
Yeah.
So yesterday, right, when it was over here, we were in a discount. It was just, we caught chopping back and forth, accumulating, right? This is an inside day. We had two, remember we said we had two large range days. So we just anticipating this day right here to be a day we just gonna engineer some liquidity, right? So when you engineer liquidity, what did we say that was? That was accumulating, right? So this is a large range day. I mean, this is a inside day, which is accumulating. The key here, right, is to observe the range but not trade it, right? So then, what's the next phase of the power of three? After what comes after
Manipulation.
Manipulation,
Right
right?
now, Tim,
If we,
my bad. I ain't mean to interrupt you. I've been gone for about 10 minutes. I've been missing that. But DeAndre told me to tell you what's up, and I gotta go. What's up, Squirt?
what's going on, DeAndre?
Hey, what's going on, Mike?
Just cooling.
You
All right, I'm gonna
say
holler at y'all. What's today?
what, you and nephew finna do something?
No, I gotta go somewhere. He just left. He just came to drop Keyshawn some shoes off. But
Oh,
I was
okay.
outside messing. I gotta let him in.
Oh,
All kind
okay.
of stuff with
Yeah.
him.
All right. Tell him I said what's happening.
Okay. All right, y'all.
And tell him I said tap in. I don't want to hear no foolishness. Tap in and pick up
You
the
know,
smart money manuscript.
DeAndre still thugging, man. DeAndre still thugging. All
All
right, I'm
right.
gonna holler at y'all though.
All right. Yeah. So long gone. I don't know if he gonna listen, but he gone. All right. So we got accumulation. What's the three phases of the power of three? Accumulation, manipulation, and distribution, right? Come up here to the next phase, right? Manipulation, right? Following the accumulation phase, manipulation phase begin. This is where price moves sharply in the opposite direction of the intended trend. This deceptive move is often referred to as a Judas swing and serves two purposes, right? To trigger stop loss orders of early retail traders, providing the smart money with liquidity they need for their larger orders, right? It encourages breakout traders to enter the positions in the wrong direction, right? What did we say before? When it go below that low, right? What are we doing? It's stopping people out and it's getting breakout traders in, right? Remember we said that before about when we was looking at the when we went below, when we went below this low over here, all right? We said we was stopping people out and forcing people in. Okay, over here, traded nothing yesterday because it was accumulation day, right? Then talk about manipulation, right? So when we open up today, right here, we open up today's trade in here. What did we do? We immediately went below yesterday's low, right? So when we went below yesterday's low, what did price do? Price, when it went below yesterday's low, price triggered stop loss orders for early retail traders, providing smart money with the liquidity they need for their large orders. And it encourages breakout traders to enter positions in the wrong direction. Why? Because price has been dropping. And retail traders say, if we come and break out this low, I want to sell short. You got willing sellers down here. Retail traders say, if like I bought here, and if it drops below this price here, I'm wrong. Get me out of the trade. Stop me out. A willing seller there. The algorithm accumulates orders, right? What they say happens on when it accumulate. Let's go back and see, right? This consolidation creates liquidity in the form of stop loss orders from retail traders who enter, either bought or sold on the edges, right? So you got buy stops resting here. You got sell stops resting here, right? So you accumulate, you drop below the low, you manipulate. And then after you manipulate, what do? You distribute, right? This is the final and most significant stage. After manipulating the market, God dog it. Right. After manipulating the market and gathering necessary liquidity, smart money drives the market in their intended direction. The market makes a sustained directional move, which is often what retail traders perceive as the real move. By the time this trend is obvious, smart money has already entered their positions at optimum prices, and they are not distributing or offloading them for profits. Traders that understand how to utilize the power of three aim to enter a trade after the manipulation phase and ride the distribution move. Right. So we come here, right? We see yesterday, we accumulated, we open up today's trading, we manipulate it, and then we rode that distribution phase going up there, right? And then if we drop down to our internal time frames, our internal daily time frame, right, and look at the market, okay, right? We look at the market. Remember yesterday, this was, let's go back up to a daily. All right. Go back up to the daily time frame. That's 1 hour. All right. Go back up to the daily time frame. Gonna come here. Gonna highlight yesterday's range. I'll leave it orange. That's fine. Now I'm gonna go back down to a 15-minute time frame. All right. And I don't see that. I'm gonna put that. All right. Now go back down to the 15-minute time frame. All right. So we come here. Right. And we'll go here. Where's IPTA? This is order flow, right? We'll come here. We'll go to IPTA. All right. IPTA delivery right here. All right. IPTA delivery. Okay. With IPTA delivery, let me see if this is what I want here. All right. IPTA. Right. So with IPTA delivery, we all know about IPTA delivery, right? So with IPTA delivery, price is gonna do it one or two different ways, right? Let me see here. Yeah, right. If they're gonna do it in one or two different ways, right? You're gonna have consolidation, expansion, retracement, or delivery / order pairing, right? Delivery is your order pairing, right? Or you're gonna have consolidation, expansion, reversal, retracement, and delivery. Okay. Right. And that's straight out of IPTA price delivery. Now let's come back over here to, what is this here? That's displacement. Get out here, displacement. Let's come over here to power of three, right? We come over here to the power of three right there. Come over here to power of three there. Where's my slide? Where's my slide that I'm looking for? Where's my slide that I could have swore was in the power of three. Maybe it's not in the power of three. Let me check this. I could have swore it was in the power of three. Maybe it's not the power of three. It's not the power of 3. It ain't the power of 3. Maybe. Oh, you know what? It's in the video. That's where it is. It's in the video. It's in the video because I went back through old slides. All right, that's where it is. It's in the video. That's where it is. In the video. I went back through old slides in the video. I'm like, wait a minute now. I know I was in the power of 3. Yes. What about the power of 3? And for those that's wondering, no, I am not a life. Time this trend is obvious, smart money has already you should move. Hey, everything about price is built on the power of 3. The accumulation, manipulation. Why are you blurred? There you go. You're right. And distribution pattern can be observed across various time frames from the formation of individual candles. As we learned in earlier lectures, the formation of a candle can represent a move that you would have a delivery models. The power of 3 can be seen with consolidation. That's your accumulation. The power of 3 can be distribution. During both the price delivery models, the power of 3 can be seen with consolidation. That's your accumulation. When you expand and retrace, that's your manipulation. Why is that? There you go. All right. That's your accumulation. In both the price delivery models, the power of 3 can be seen with consolidation. That's your accumulation. When you expand and retrace, that's your manipulation. And then the delivery is your distribution. Then with the second delivery method, the consolidation is your accumulation. But in this one, you have 2 stages of manipulation where you expand in the opposite direction and then reverse. And then you have a retracement that manipulates again. And then you have the delivery, which is your distribution phase. All right. All right. Y'all get that? Y'all heard that? All right. Now, when we come here, because we'll talk about the power of 3. Right. Let's talk about the power of 3. And we looked at the daily chart. Now let's go back to get everybody caught back up because it took me some time to find it. Right. We said that price, right, was here on an accumulation day. I did nothing. I didn't trade because it was accumulating. Right. We said we open up here today and we manipulated. Once we manipulated people in, manipulated people out. Then we came up here and we distributed. This was our accumulation. This was our manipulation. This was our distribution. Looking at the higher time frame, what is accumulation, manipulation, distribution? That's the power of 3, right? And then when we go and look at our daily time frame, right? Here we go, right here. As you can see here, right? For those that was on the live stream with me today, we said that when we opened up tonight at midnight, we had dropped down and we had manipulated out the lows. We did not take out that low. That low was acting as a protected low. So since we manipulated this low, came up here, got a bullish break in market structure, we were looking at higher prices, right? Then when we came into the day, we blasted off right there. We went up there. I said, we are making a large 15-minute wick right here, right? I said, the bad thing about making this large 15-minute wick is that price likes to come and revisit it sometimes. So we put quadrants on that wick, right? We went all the way up there. This candle opened up and it came very close to the prior day's high, right? We also went over here and made relative equal highs. Right there, right? Price traded all the way back down, right? Because I talked about, I say, if I was in this trade, right? We talked about some inversion, fair value gaps. We talked about some BISs because we had this BISI. We was anticipating to be supporting price, all of that, yada, yada, yada. I said, if we traced all of it, I would be pissed, right? But we had come all the way up here, and then I'd be doggone if we did not come all the way back down to that upper quadrant of that 15-minute wick that we had just talked about. That price will sometime want to revisit it, and then it turned around and right? So now on the daily time frame, right? What did we say yesterday was? right? That's, remember, we highlighted yesterday's range, right? We said yesterday was accumulation, right? We got accumulation. We came into today, right? We got manipulation, right? And then we went up and we got distribution, right? Came up here above this old high, right? And distributed. See, once we got up there above that old high, see our price back down off of there. We was offsetting positions up here, right? So the power of three: accumulation, manipulation, and distribution. Just like we said on the higher time frame. Remember we talked about over there, we said this dropped down, and from the beginning of the week until Wednesday, that was finishing the distribution from that old accumulation, manipulation, distribution move, right? We was over here, right? Wherever it was, we said accumulation, manipulation, then we was finishing that move below that low, right? And then we came over here, we had accumulation, manipulation, and distribution above there. But guess what? It doesn't stop there. It doesn't stop there. Now we're going to look at it on a intraday time frame, right? Coming over here from the London time frame, right? Once we came down here, right? Just on an intraday time frame here, right? Once we came here, we had us an accumulation, we had us a manipulation, and we had us a distribution back above that high right there, right? On the intraday time frame. Once this right here was over, right? We had us accumulation, we had us a manipulation, and we had us a distribution right there. Power of three. So we had the power of three here, ranging through two sessions, the Asian and the London, right? And then over here, we had the power of three inside the New York session, the New York pre-market, right? Accumulation, manipulation, and distribution inside the New York morning session on its own, right? So we can, if you know where to look, you can see the evidence of the power of three, right? But if you understand the narrative based off of, right, the concepts, right? Based off the concepts. And you see here, we went through and looked at the actual slides that's inside the course. And you see how, based off of what we talked about today and those that was there on the tape reading session, you know that everything I said that we was looking for right here is true. And now, after looking at the slides, some of the slides with some of, and you see, we went through several different concepts. We looked at the power of three. We looked, yeah, I admit, I didn't know exactly where it was in here, right? Because it's a lot of information, but it's in here. You know what I'm saying? It's in here. So I'm like, okay, is it in here? No, it ain't in it. Is it in there? Okay, here it is over here, right? It's in here because I've internalized it and I know how to identify it on the chart, right? Maybe I might not know the book, chapter, and verse, but I know who said it. You know what I'm saying? Right? So you see, if you study the material, you go back and go through the course. I mean, you go back and study it in the charts, then you learn how to apply it, right? And when I was walking through this price, right? When I was walking through this price, did you hear me at any time say, oh, let's look for which PD array I'm going to enter in on? Let's look for, no. Why? Because what you need to understand is order flow and price delivery. Once you understand order flow and price delivery, now you can decide what PD arrays do I want to focus on based off of my trading style, based off of how this asset trades. Do I want to trade using order blocks? Do I want to trade using fair value guide? Do I want to trade using them all? Right? Because in high resistance conditions, right? What do we anticipate the IP to retracing back to during high resistance conditions? Who can tell me? What do we anticipate IP to retracing back to when it's very high resistance? We anticipating it going
back to the open.
Back to the who?
Back to the opening price.
They start with an O, but not opening price. during high resist. What's the conditions of high resist? What's some signatures of high resistance? What?
Overlapping candles and
Overlapping
long
candles.
wicks.
Overlapping candles and what?
Long wicks.
What? Not just long, no, not long ways, overlapping candles and what?
Oh, deep retracements.
Deep retracements. Very good. So let's go to it. We already got IP to open. We got IP to open. That's order flow. That's IP to. Okay. Is it? No, it's not IP to. I'm tripping. It ain't IP to. It's the PD array matrix. PD array matrix. All right. So looking at our PD array matrix, right? Right. Looking at our PD array matrix for a deep retracement, right? If we're looking at a deep retracement, we're anticipating price coming all the way back. I said it started with an O, right? So for a deep retracement, right? If you're looking at a deep, which of these is the mitigation block or the breaker? The mitigation block, the breaker, or the order block? Which one is going to be deeper in the retracement of a move?
The order block.
The order block going to be deeper in the retracement of the move, right? So if you are in high resistant conditions, right, you probably want to sit around and see if price goes all the way back to the order block, and if there's one present, a rejection block, right? Because if it trades all the way through the old high or the old low, right, you're either not looking at the right dealing range or you on the wrong side, right? Or you're on the wrong side, because if it trades outside of the box and a retracement, you're invalidating your order flow, right? So if a rejection block may not be present, but the order block is typically going to be there, right? So if we get a deep retracement, if we're in high resist conditions, you're looking to see, are we trading all the way back to the order block? So if we trading all the way back, if we're constantly trading all the way back to the order block, and you know we're in high resistance conditions, right? Then why would you be trying to get short as soon as it hit a breaker? Why would you try to get short as soon as it touch a fair value gap? If you know you're in high resistance conditions and you just want to trade that, right? What is it doing in high resistance conditions, aka consolidation, right? What is it doing in high resist conditions, aka consolidation? It's trading to the bottom and the top of the range, right? Right. It's going from the bottom and the top of the range, right? When you look at the little areas when it's in a tight range, right? It's going from the bottom and the top of the range, right? See that? Go up there, right? Come back down there, go back up there, come back. It's going to the bottom and the top of the range. So if you're trying to trade inside of a range, right? Even here, right? See here how we go up, we come all the way back down to the order block, right? When we go up, right? If you see we're in tight range here and we come all the way back down to the order block, why would you try to go in as soon as we touch that fair value gap? Why would you go in as soon as we touch that breaker, right? There's an order block down here. Let it come down to the order block, right? And this is on a 15-minute time frame. Let it come back to the order block. You're in high resistance conditions, right? And then you're looking at this right here. This is a propulsion block. So if you feel like you're on the right side of the market, right, let it come back to the propulsion block, right? Here's your overall order block there. You got order block inside of order block. That's propulsion block. Let it come back down. You're in high resistance conditions, right? All the PD arrays aren't going to be there, right? But it lets you know this is the order they're created within a premium discount zone. PD arrays are a list of specific price levels that institutional traders are likely to interact with. These are the key components of the PD array matrix, and they have a specific hierarchy and order of importance, right? Here it is here. This is your equilibrium. When it's going up into a premium, right? This is seeking them out. Why is it seeking them out like this? Because this is how they're created. They're created in this order. As price is dropping down, right? You're going to have your high, right? If a rejection block is there, the rejection block is going to be at the high, right? If you have a bearish order block, the bearish order block going to be just under the rejection block. If you have a fair value gap, the fair value gap is going to be in next. And if you got a breaker, right, your breaker is going to be down there at the bottom of the swing. Why is that? Because price is going to come down, right? Price is going to go up, right? And when price dropped back down, guess what? Price went, it made a high, price came down. When price made a high and came down, guess what? There was a high up there, right? Might have been a rejection block, might have been an order block, right? Right? All of that is being created because you're doing like this. So when you get ready to come back up, when it's coming back up to a premium, guess what? This low that went up there and broke that high and you trade it back down, when you come back up, that's your breaker, right? If this low did not break that high, that's your mitigation block, right? When you came down and created that order block, that fair value gap validated that order block. So when you're coming back up into that fair value gap that validated that order block, you're going to hit that fair value gap, right? Maybe the fair value gap is there. You know what I'm saying? Maybe it's below the order block. Maybe it's above the order block, but then you got that order block there. It's trading back. It's seeking it out because that's the order that it created it. See what I'm saying? And then when you look at it in price, it's all right there for you, right? When we consolidate it here, right? You have a consolidation there, right? And we take off there, right? We displace away right there. When we trade above this area here, what do? We close with a possibility of creating a fair value gap that big, right? Creating that fair value gap that big. When we left this area consolidation, right? What is that right there? That right there is your bullish order block right there, right? The last down close candle is your focus, but these your last down close candles that's right at the center of that consolidation. Last down close candle is your focus right there, right? So you got your bullish order block right there on this 15-minute time frame. What happened here, right? Boom, we got an immediate rebalance of this possible BISI right there. Then we look at it on a lower time frame, right? When we look at it on a lower time frame, what happened, right? Once we traded, right? When you understand the order flow and price is exceedingly bullish or bearish, right? As soon as you offer that price right there, right? As soon as you offer that price right there, that is when the order block is created. All right. So we go down here to the 1 minute time frame, right? As soon as we go down here to the 1 minute time frame, as soon as on this 937 candle right here, when we came up and we offered that price, right? Now that order block has been created and the algorithm knows that. The algorithm knows this is a order block now. So you can trade it off of a first touch where you trade back down here, right? What does it do? It trades right back into the order block there and we take off, right? Once we take off, we go up there, right? And then guess what we do? Now that we've created it, right, and we used it as a first touch on a lower time frame, now it's coming back on that 15-minute time frame and trading back down to that order block, right? And when it trades back down to that order block, right, guess what it's also doing? It's also creating an immediate rebalance right here, right? Why? Because you close with the possibility of creating a BISI, right? You close this 930 candle with the possibility of creating a bid C that big, but this 945 candle came back down and overlapped with that 915 candle. And then this 10 o'clock candle took off. So that validated this as an immediate rebalance. When that traded back down, that was giving you the clue that, hey, this can be an immediate rebalance. And then that right there was your confirmation, right? What did you have to support the idea that, hey, this can be an immediate rebalance and this is something that's tradable? Well, let's look and see. Why don't we? All right. What did we talk about this morning? We said that we were bullish. We came in, immediately sold down and took out sell side liquidity, right? We're anticipating this to be a Judas swing. What supports that idea? We got a hourly bullish fair value gap there that we anticipate to support price. Not only do we have an hourly bullish fair value gap that we anticipate to support price, right? We have an hourly high probability inversion fair value gap there. What makes it a high probability inversion fair value gap? This is the first fair value gap that's created when price dropped down and manipulated out this higher time frame low. Then we came back and got us a true change in the state of delivery, right? Why? Because this is our manipulation phase and this is our bullish breaking market structure. So this is our accumulation. This is our manipulation. So we get consolidation, expansion, reversal, retracement, and delivery, right? Remember that from the price delivery, consolidation, expansion, reversal, retracement, delivery. Remember in the video, we said the consolidation, right? That was your accumulation, right? The expansion, then you had the retracement, which was a type of manipulation, and then the delivery. Then over here, we had consolidation. Then we had the expansion, and then the expansion and reversal in this case was a type of manipulation, and then the retracement was another type of manipulation, and then we had the delivery. So we had two stages of manipulation over here, one stage of manipulation over here. All right, so we come over here, right? Then we see us, we come here, we talked about, we consolidate it, we expand, we reverse, we retrace, right? Because we consolidate here, we expand there, right? That's manipulating. Why? Because we're bullish and we're going into higher time frame sell side, right? So we expand, then reverse, right? So we just manipulated price right there. Boop, boop, right? Now that we manipulated price there, guess what we did? We retraced here. So when we came up here, right, we had breakout traders there. They put their stops there, right? And then it started retracing. In this retracement, what happens in this retracement? Let's go and see. Tim, why do you say it's a type of manipulation? Let's go and see what happens in this retracement, right? Right? We say that, we say that retracement, right? Is it? No, it's not here. Where is it? Is it power of three? Oh, power three. Is it power of three side? I think it's in the power of three. Let's find out. Yeah. Yeah, power of three. Let's look at power of three. Looking for, we'll talk about weak shorts. Looking for a weak, it say something about weak shorts, a weak longs. Weak. I just read it somewhere. We gotta find. All right, not in there. Let's go to here. Not in there. I just read it somewhere. Week. Right there. That's it right there. Oh, it's on the reaccumulation, right? Reaccumulation, week long holders are squeezed in this retracement right there, right? I knew it was somewhere. So it's inside the buy programs under reaccumulation, right? Reaccumulation, fair value is in reaccumulation, it's under order flow. Reaccumulation, fair value is in retracements lower at discounted rates. Week long holders are squeezed in this retracement lower, allowing smart money to reaccumulate new long positions entries and induce more sellers at discount prices. An expansion followed by a retracement, right? Remember what we said over here, right? We said the retracement is a type of manipulation, right? So we got the expansion and the retracement. And what did it say happens with the expansion and the retracement, right? Over here, well, I should say here, right? Accumulation, manipulation, right? So we go consolidation, expansion, reversal, right? And what happens on the retracement, right? It said that weak long holders are squeezed in this retracement lower. Remember we said here, right? When we trade up here above, right? These highs, right? You trip people in who want to go long. Their stops are placed below these lows, right? When we trade above these highs, right? Their stops is placed below these lows, right? We see this as strong support right here. Oh, triple, quadruple bottom. During this retracement back down, the weak long positions are taken out, right? Let's put it side by side so we can see it right here, right? Right. Weak long holders are squeezed in this retracement lower, right? What does that look like? An expansion followed by a retracement. Remember what we said about the retracement, right? We got two ways up to deliver price, right? You got a consolidation, expansion, reversal, retracement, delivery, right? Or we got a consolidation, expansion, retracement, delivery. So when we're on this retracement, weak longs, when we trade up above here, what do we do? Above highs, we trip in breakout traders and we take out traders who, hey, I'm short. If it goes above this high, take me out. So we're going above here, selling to willing buyers, right? Willing buyers want to break out, they get tripped out, right? So it's not just going through it one time and going to give you the ability to just read price and be a market maverick. But yeah, I think it do all right. And as you see, it's stuff that I use every single day, right? Gang, gang. Somebody who was on the live stream today, right? Everything that we just talked about here, right? Is that the same stuff we talked about this morning before it happened? Hmm? Hmm? Yes, no, maybe so. Somebody who was on there?
Yes.
What? Okay. Yes. All right. And based off of what we just looked at with the video, with the slides, that's in, oh yeah, and the slides is right there. Like if you go to the thing, click on the slides, hit download, right? You can save the slides. Here they're the same slides I was just using, order flow. See the order flow said these are the same slides I was just using. Right there, right? Just going through the video and going through the slides, right? Was it the same stuff that we looked at in the charts? Yay, nay, maybe so. Yes, no, maybe so. Yes, we still here Empire Trading. Y'all sleepy. Y'all don't want to talk to me no more. All right, man. It's late. It's Friday. This was a good session, I think. Hopefully y'all got something out of it.
Oh man, super good. I was just telling you, Susan Long, man, how much game you be giving to these people, man. I'm telling you, man, it's like, but yeah, good session, man.
I'm trying to get 130,000, man.
You too.
I'm trying to get 100. I'm trying to get 130,000. $134.97. I got to reimburse your nephew $134.97. He went and bought some groceries today at Walmart.
Oh yeah.
Yeah, he told him like I'm going grocery shopping when I get off from work. He like I'm about to go to the gym, and then when I get from the gym, I'm going to work. And then when I get off from work, I'm gonna go by the grocery store. And I'm like, what you going to get? He like just going to pick up some groceries. So I said, how much you spent at the grocery store? He like $134. I said, whoa. I was thinking about giving you money back, but $134.
Man, that ain't but a pack of lunch meat and 2 loaves of bread nowadays, man. 134. That ain't getting you nothing, boy.
Hey, Empire Traders asked me, was I gonna save this? He got off from work. Y'all think I should save this video for Empire Traders?
Yeah, for sure.
Who think I should save this video? Y'all think I should save the video? Is anybody? Are y'all gonna go back and look at this video? We the people that fell all off. People, it was so many people in here earlier. People that fell off. They done fell off to the wayside.
Too, right? Automatically.
Ain't nothing automatic.
Oh.
Ain't nothing automatic. You know what I'm saying? What's automatic? You know what I'm saying? That's automatic. People that left. How many people? It ain't nothing but 9 people left on YouTube. Is how many people left in Zoom? It's 8 people left in Zoom and 9 people left on YouTube. Yeah.
That sounds like a full class to me.
Deborah said, please, Deborah, where's Sherwin at? If okay, let me get my countdown. I'm gonna get my 30-second countdown. If I don't hear Sherwin's voice saying, "Down your gun day, save the live," I ain't saved it. Let me get my countdown. Hold up. Let me find my countdown. Am I sharing my screen? Let me see. 30-second countdown. Let me get my countdown. Where we at? Uh-oh. Oh, there we go. Wait a minute. This ain't the one I be using. There we go.
Aranya Grande, save the video for me.
What's up, Sherwin? What's going on? I knew Deborah. Oh no, wait, let me get in the Zoom. Baby, come here.
I'm good, man. How are you?
I'm doing good, man. Just having fun with the people, man. Trying to share a little bit of knowledge.
Hey, ain't nothing wrong with that.
How the grandbaby doing?
Well, he got a little cold, but other than that, he's good.
Oh man, his grandma whole RN. Tell her to prescribe that boy something.
Oh, she working on him.
Now tell her to do the good work on him. Don't be giving him that I'm trying to get you out the ER work, or I'm trying to get you out my waiting room work. Tell her to put the good work.
Oh, she never half steps. She always do the good stuff.
You supposed to say that, man. You know what I'm saying? You try to keep your lamb chops and Brussels sprouts coming, man.
I've been knowing this lady for going on 25 years. She don't half step.
Okay then. Hey, lift your queen up. All right, man. I appreciate you, man.
All right.
Hey, look here, man. That's all I got, man. Hopefully y'all got something out of this. What I want to do, I want to go through, like I always do, I like to just go through price and talk about it from an aspect that you really need to understand. I'm not big on teaching entry models. Because I don't believe in making one-trick ponies. If you understand order flow and price delivery, then you can engage with the market like from a intellectual standpoint. You're not just being a robot and saying, okay, I see this pattern, I'm acting. You know why you're acting, and you can repeat it, right? You can repeat it at your own discretion, right? As we saw today, we saw the power of three play out over a couple weeks. We saw it play out over a couple days. We saw it play out over 2 sessions, and then we saw it play out inside 1 session, right? So you could have your discretion of how you want to trade that. If you want to be a swing trader, you'll be looking at it playing out over a couple weeks or a couple days. If you want to be a day trader, you'll look at it playing out over a couple sessions. If you want to be a scalper, you'll look for it playing out within the same session, right? Even within the same macro time. You know what I'm saying? Even inside the same kill zone, right? So when you understand time and price, you understand order flow and price delivery, you understand what really makes the market move, right? You can change the trajectory of your financial future. And hopefully, you know what I'm saying, I gave y'all a little bit for everybody that's already taking advantage of the Smart Money Manuscript. Hopefully I gave you a little bit of direction into how to utilize the material that you're digesting, right? And when you go through and look at the slides, understand what it's saying, and then you go back and see, oh, this is how it looks in price. This is how I'm supposed to look for it in price. You'll see it's the same stuff we talk about every day, right? Do me a favor, y'all like this, man. Share it with somebody who might get something out of it, right? If you've already taking advantage of the Smart Money Manuscript, share it with somebody who might say get something out of it. Like I say, it's not just for day traders, it's not just for traders, right? I think everybody needs this information, because everybody, if you know they have worked in their life, then they have a right to get some type of benefits from the system. And the Smart Money Manuscript teaches you how to go out there and look and see exactly how much, based off your work history, right, you're entitled to in the system. It teaches you how to find your number for retirement based off of what you're entitled to from the system, based off of what you already got saved. You know, okay, I need to save this amount for this year and increase it by this amount over every year to get to the point where I want to be. So even if you don't want to be a trader, I gave a sneak peek on that lesson in the past. I can't remember what day I did it, but I gave a sneak peek on that lesson. We played the video and everything. So yes, it is in there, but take advantage of this information, man. That's the end of my sales pitch of the day, right? Tim, why you talk about it so much? Hey, man, I come out here, I be giving a lot of free value. So they say closed mouths don't get fed. I put a lot of work into this course, so I'm going to talk about it. And I'm going to keep talking about it. If you don't like it, till next time I decide to get on Algo's internet and share my thoughts on this thing they call price action, man. My name is Timothy Lee Rogers Sr. No, I am not Captain America. My name is Timothy Lee Rogers Sr., aka Haranya Grande. That's just big spot if you don't hablo Espanol. Y'all be safe out here in these trading streets, man. Gone.